Hey traders, Raghee here, and in this update I'm going to take us right into the daily time frames and show you some interesting swing setups that are on my radar. And we're focusing on the double green structure of the S&P, the NASDAQ, and the Dow, and not necessarily the Russell, because the Russell still has not turned into an uptrending market. Doesn't mean that it can't head higher, but let's remember that structure, meaning the way in which the 8, 13, 21, and 34 EMAs are moving, increases the probability that buy the dip is going to work. So here's where I'm looking at a buy the dip, and this would be an aggro position, but this would be a buy the dip in the NASDAQ. So a couple things. First of all, we've been talking about whether or not there's been low volume, high volume. Volume's a big part of what I do. I actually like that the volume's pretty decent today in terms of the average. And so this tells me that the weakness isn't low volume. It's not super high volume, indicating some sort of panic. It's just a little bit less than normal. And we've touched the 21 exponential moving average by way of the 21 propulsion dot. That little dot right there is actually the 8 exponential moving average crossing over the 21. So rather than having just a 21 EMA hanging out there, the only time that I want to pay attention to the 21 period exponential moving average is when the 8 EMA has crossed through it. And I'll do these kinds of crosses for other exponential moving averages. If it's the 8, the 13, the 21, the 55, the 200, that cross to me increases the probability that that moving average has validity, in this case, as support. All right, so having said that, a couple things to keep in mind. We've talked about earnings in previous countdowntrader.com newsletters, and we know we're past the majority of those high impact that high impact week for tech. So, we've got that in the rearview mirror, and a lot of these names after really great earnings. Apple, 60 feet over the fence. Just absolutely sent it out of the park. Same thing with Amazon. I think that after that initial shakeout, we could see the market start to realize that there's some good buying opportunities here. So the first place we'll think about is the 21 EMA, but that still leaves my preferred zone, which is the wave, right in here, still in contention. So the 21 EMA becomes the first place I'll look for an opportunity, and then I'll look for something closer to 13,600, even in the middle line of the wave, so about 13,630. Now, that's a pretty wide range. I do not recommend trading this with the underlying NQ mini for most traders. One, it's extremely cost prohibitive for most traders, and two, it's a lot of risk when you think about $20 per point. So the micro is a really good alternative, the micro NASDAQ. But what I'll typically do is I'll step in with the triple Qs. I'll grab some calls in the triple Q. And what I'm looking at right now is QQQ for June 18. QQQ for June 18. So even though I'm looking at the NASDAQ, when it gets down to these levels, what I'm looking at is, instead of buying NQ, the NQ becomes a trigger for the QQQ 18 June, and then I'll start looking at the money calls in QQQ. So these are one wide, which means that as we're going down this zone here, you might end up with 3 different strikes, but that's okay. If you want to pick just one strike, I would say go with the 335s. It's a little deeper in the money. But if you're looking at just wanting to keep things nice and clear and compact, even though the 336s are in play right now in terms of where the QQQs are trading, you can go a little bit more at the money and look at the 335s. These are where the second most open interest is at right now. First is at 340, second is 335, and the third is 330. So you'll think to yourself, wait a minute. So all the open interest here is just gravitating to the 0, the 5s, the 0, the 5s. And that's correct. You'll see that on a lot of the options that trade one wide. Traders will just go grab the 0 or the 5 strike, meaning 330, 335, 340. All right, so that's what we're looking at here, the 335s on this pullback. Now, the S&P is not pulling back in the same way, and frankly, neither is the Dow. So this is a post tech and Dow and NASDAQ's lagging right now. This is where the opportunity is. If the Dow were to pull back, we'd have a different conversation. But right now, I think this is where we could look at an opportunity to scoop up these calls while the market's still, maybe reeling a little bit. Post Apple and Microsoft, a little bit of lagginess. You can see the XLK is pretty heavy. XLC kind of heavy. XLY, again, even though we punched up to a higher high, selling off. So this is where I want to focus on some of this. Now, at the next level, if I go another level deeper, we can start looking at the sectors and we can start looking at the individual stocks. But at the index level, where I want to start, those QQQs via the NASDAQ futures trigger is where I'm going to be looking for a swing opportunity. This is the first of a number of entries. That's the first level, 21 EMA. All right, I'll see you in the next update.
Without simpler trading, I could not have financial independence.
This is one of the best investments I ever made in my life.
It's helping me find consistency.
It's one of the things that won me